Alrighty, so today we have in the house Chad Freeman. So Chad Freeman is the founder of MHP Investors, where he buys and revitalizes mobile home parks to create real value and provide affordable, quality housing. He's an investor focused on impact, returns, and adding value. And I'm just remembering this now. You were the first client I ever had back in the days when I was a broker. You're the first park I ever listed. So we've come a long way since then. But I've known you for quite some time, and you're always doing good stuff. So Chad, I appreciate you hopping on.
Yeah, it's nice to be here. Thanks for the invite.
Yeah, of course. So one thing I found really interesting about you, so you got started in your career as an airline pilot. So can you talk a little bit how you decided to be a pilot and how that led you down that path to eventually getting into real estate?
Yeah, I think just growing up, my parents plugged me into aviation and real estate because well, my dad was an airline pilot. He's retired now. And then they were both in real estate. They both were selling real estate, figuring out investments, buy and hold, whatnot. So I kind of was indoctrinated with it all. And I was super motivated to go into airlines. I was working hard. I've always worked hard since I was a little kid. So that's what got me into the airlines. I got a big shortcut with my old man being there. He was my flight instructor. And I knew that
Nice.
I'd have a ton of time off because I grew
Yeah.
up in an airline family. So I was ambitious from early on, and real estate was interesting to me going into college. So I started to look at minor in finance and stuff like that and things that I could do once I graduated with real estate.
It's interesting. I've noticed a lot of pilots, and it's funny that you mentioned that. A lot of pilots get into real estate, and I never thought about how much time you have off. I mean, how does that schedule typically work as a pilot?
Well, when you start, you don't have that much time off. You don't get paid anything. But I did that early in life, so my seniority now is paying off big time. But it's all based on seniority. So I do long haul international, and I get to pick and choose a lot of my schedules. So my worst month ever, I'm working 12 days, and then I pretty much time out. The FAA won't let you go fly anymore after that. So it's nice, efficient flights. But it's also given me 20 years, or I don't know how long. Yeah, over 20 years to sit there and study, because a lot of long haul flights, we have breaks, and you have time that you're not doing anything. So you can read a lot of books. You can't read while you're sitting there flying, right? A lot of time and commuting back and forth to absorb information. So I've been doing a lot of that with stocks and real estate forever.
Nice. A lot of time to perfect your airline pilot voice.
Yeah. Try to
Why
say
do,
it.
why do, this is totally unrelated to real estate, but why do all pilots talk the exact same way?
I don't know. I saw a funny thing. A friend sent me, a pilot friend, where this guy has like uh, a mic, like the headset, and then he goes to do an aircraft PA, and he sticks it in, like sucks it in his mouth, and he's like, but it's all like static. But I don't know. I try to
Nice.
have fun with them. And if you've seen Super Troopers,
Yeah.
well, anytime my daughter's in the back of the airplane, she's got to make sure that I say meow over the PA. So I always sneak it in.
So how long is a long haul flight? Is that like 10 plus hours?
The longest ones I've done are pushing 16 hours, 16 to
Wow.
17 hours. So we get a break. You split the flight time minus an hour. So if you had a 16-hour flight, it's, 7.5 hours each. You take 15 hours and divide by two. So it's a pretty easy job.
Nice.
It's turned out to be great.
Nice.
More millionaires have been made in real estate than any other sector. You got all this time off, and there's other pilots doing it. And then every time I go to work, I'm flying with accredited investors, so it's good for syndication.
Yeah. Yeah, there's a lot of people I think that like they tailor all their marketing just to pilots. Like the capital raiser types who they focus on just pooling investors' money. Like a ton of them are pilots because like you said, they sit down with somebody with nothing to talk to or with no one else to talk to for hours. And like you said, every one of them's accredited investor. You know what they make. They make the 200 plus or 300 plus. So,
One pilot in particular, he's had a couple smaller multifamily, like 20-unit apartments. So he said every dime he's made at United, well, I work for a big airline that starts with a U. Every dime he's made, he's saved it since he was in his 40s. So it's a wonderful backup plan as well.
yeah, that's
That's
awesome.
another reason I got into real estate is because airlines are inherently unstable. I entered right after 2011, got furloughed, lost my job, and then worked my butt off for a really crappy airline, making nothing. I worked more than I've ever worked, and in 9 months, I made $7,300.
Yeah,
Real
no
estate was
bueno.
also a financial plan for me from the beginning because I knew that the airlines were unstable and they weren't going to pay much for a while. And the airline industry's changed a lot. But yeah, real estate's cool stuff.
Have you found that to be a good selling point when you're talking to other airline pilots who may want to invest? That like, hey, you make good money, but also jobs can end at the flick of a switch, and so it's nice to have passive income from other sources. Has that been a major pain point of theirs?
Uh, Not when I'm at work because the guys I'm at work with are all very senior. The airline would have to go out to get to them.
Makes
It's
sense.
a lot
Yeah.
of times I'm sitting there with a captain he's in his 60s and literally the airline would have to go out of business. By the time it did, he'd probably be retired. So
Right.
they're not worried. But I've approached it wrong in the past. It's always been awkward for me to try to raise capital, so I wasn't super successful at it. But I've been being polished, and it helps.
Yeah. Yeah. What were some of the things you were doing that weren't working, and then what ended up working for you?
Asking for stuff from myself, just asking, give me money. And it's awkward and it's not very effective. And when you start giving out information without expectations of bringing in anything in return, stuff just starts coming to you.
Yeah.
And then coaching, different techniques on just go along with negotiations and everything else is learn the person. It's not about the deal. It's not about the money. It's about the person.
Right. Yeah, it's not an industry where being a good salesman is necessarily an advantage. It's more of like if you have the ability to be genuine and get people to trust you, like because you're actually trustworthy, that goes a long way. So that's an interesting point you brought up about knowing somebody's background. So what would you say are some of the keys to vetting somebody that you might want to partner with on a real estate deal or invest with as a syndication or something like that? What are some keys that you found to making that process smooth?
As far as JV deals, we haven't done a lot, but we're planning on doing a whole bunch of them. And I think like everything, there's hair on every deal. So be careful, paper it up properly, get an attorney involved, manage expectations. Like going into it, the more clear picture you can have, the better the results are going to be, the less room for confusion. So have solid partnership agreements that are legal in writing. Also have good exit plans for partnership agreements because sometimes shit happens, something happens to somebody.
Yeah.
I hope you don't mind if I say shit on your podcast.
No, go for it. Go for it.
Cool. I didn't want you editing me the whole time.
Yeah.
Yeah, and then so syndicators though, I'd like to teach people or talk to syndications from what I've learned. And I had some of my investors that lost their money everywhere but with me. And I think the real difference was we had cash flowing assets backing us up when we went to syndicate. So when things didn't go to plan, which they never do, we had different exit strategies and we had cash flowing assets that backed us up to where we were able to return money with interest, and other syndicators just lost it. It was just gone. So we were able to protect that. So I'd say if you're looking at any syndicator, do your due diligence carefully, vet them, look at their track record, their balance statements, find out who they are because you invest in people, and people invest in other people because they like them or get a good feeling, but that doesn't mean they're a good performance. Yeah, and most people didn't do any due diligence with us at all. They just gave us the money. So it tells you, again, that gives you a large responsibility or fiduciary duty to your investors to protect their money. And it tells me that, again, people invest in other people that they know and they trust and they like. It's not about the deal, it's about the people.
Right, exactly. Yeah, because any property that you're buying that's an existing property is probably doing well enough to just continue. Really, the only thing that's going to keep it from getting where the person's planning on it going is just them not doing a good job of execution. And it's tough. I mean, it's hard to verify because sometimes somebody just growing a lot is not necessarily a good thing. Sometimes people are biting off way more than they can chew. It takes a long time for people to start realizing, and the operators themselves start realizing, like, hey, I'm not doing as good a job as I thought I was going to do. That brings up another good point. What is something that kind of sticks out to you that shows that, hey, this person's not being conservative? Because obviously, when we get a deal, any real estate person gets a deal, they get really, really excited about it when it finally makes sense. Because right now, I mean, so few deals make sense just as is. What are some of the things that you notice that's a red flag that, like, hey, this person's being a little ambitious? That may not, what they're saying may not come to reality.
I haven't been paying a lot of attention to big syndications lately just because I know of how many went crazy with the interest rates, and it seems to have calmed down and absorption's starting to take care of the the increase in multifamily hitting the market and not as much downward pressure on rents. So I just hit a tangent. What was your question? Trying to answer.
Basically, are there any red flags where you look at a deal and you're like, hey, this person's being way too optimistic? Like, is it they're expecting a 7 cap still, or their expense ratio is 20% and that's not realistic? Like, are there things that you've seen or you've heard of that would just be an immediate red flag to you in that regard?
I want to say I'm seeing, or thinking the opposite kind of. So with the interest rates at nothing forever, post COVID or during the middle of the craziness, everybody was just out buying deals like crazy. And I saw all these gurus pitching how to get the deal, but they don't pitch how to operate, right?
Yeah.
And then one in particular, I forget the guy's name, but my girlfriend was in class sitting next to this guy, and then he made the front page of the Wall Street Journal because he had all adjustable rate loans, and the interest rates went up. I rough guessed his payments went up like $150K a month or something. So
Man,
melts down. It was hundreds of millions of dollars. So
yeah,
I don't feel the frenzy in the market. Maybe even looking at this too with the mobile home parks, it seemed in 2023 it just kind of went crazy, and the cap rates seemed to have compressed because seller expectations didn't really come up over time. I think they've come up now with the interest rates where they're at, and they seem to be falling. And actually, commercial loans, especially for mobile home parks, are looking pretty sweet from what I just saw a couple of days ago or yesterday. So they're coming down to like 5%. So
yeah.
now we have that cap rate spread, and I think it's time to buy parks again.
Yeah. It seemed like for a while it was just a bidding war. And, you could have a park that really didn't make sense and you could list it and you'd be like, that's never going to sell. And it would sell. And what happens is like so many people started calling these park owners too, that there was almost no park in the country that wasn't getting hounded by buyers. So a lot of them who weren't ready to sell just started giving higher and higher prices. And they weren't really trying to sell. That was just their way to get people off the phone. And then now, years later, those calls have stopped because people know, hey, I can't hit that price, and the rate is just not going to make sense. And I've noticed from cold calling a little bit now that, hey, like those people are ready to talk. And the prices they were giving out, those weren't real expectations. Now they're back to reality. And parks are awesome because there's so many of them that are still free and clear. But it's also a negative because they have absolutely no motivation to sell if they don't want to. So it's usually like a life event you're waiting for. Just staying in touch with that person until, hey, they're moving or, a family member died or whatever it might be that they're finally ready to sell. And when they sell, they all, from what I've seen, most sellers, when it's time to sell, they're pretty realistic. Is that kind of what you've noticed as well?
Yeah, I've not done a ton of volume, but you're making me think of a few in particular. One, when I was just getting into mobile home parks, I found this amazing park, mom and pop operator, and the guy basically told me he'd sell it to me on seller financing if I just give him the terms, and I just was too green to figure out. I've got this amazing park set in my lap with seller financing.
Yeah.
And I just didn't follow up enough, and I moved out of Texas to Florida, and then I called to follow it up, and he had sold it. So it's, when you're talking, and I'm thinking of what a long process it can be too sometimes to get mom and pop, and they don't care about you. It's so you just got to stay on the radar screen, stay in their face until it happens, or give up.
Yeah, it's tough. I'm working on a deal now. I've been talking to them for 4 years. It was the first park I've ever bought, or first park I ever tried to buy. And if we close it, it would be the 10th. So, like, It has just been every single month. Not every month, but, like, staying in touch with them because exactly what you're talking about will happen. Like, you are staying religious about following up with them, and then the 1 month you don't, it always seems like that's the month somebody else gets it. And I don't know who these lucky people are, just calling people and getting a deal done quickly, but I'd love to be one of them. It just doesn't seem to go that way.
Well, you got 10 of them, so you were at least 10 times, right? It's some luck mixed with volume.
Yeah, exactly. It's some perseverance there. So what would you say is kind of your overall strategy? Because mobile home parks is a niche, but within that there's several different niches. There's fix and flip kind of guys, there's buy and hold, there's institutional, there's tough turnarounds. What would you say is your guys' bread and butter?
Everything we've done is value add. I love the value add, but there's other parks I've been trying to buy that are not big value add, that are just market rate rents and everything's perfect. You just buy and hold and go off the cap rate spread. Just wait, and do interest rate adjustments. Can't beat that. So it's really a process of elimination for us. Anything that comes in the door that we don't want gets tossed out, and then you try to make everything else work.
Right. So on those, I'll call them stabilized ones that you're looking at. Do you have an exit plan of like a refinance at some point down the line, or is it pretty much like, hey, we're going to buy it and just the cash flow we're getting is good enough because we know the equity is going to build over time?
Look at the individual park, right? And then the loans too. So the stuff we have now, we've been fortunate enough to find a fully amortizing loans with the local bank that likes us.
Nice. That's awesome. Yeah. Then, like, to your point, in terms of like people checking out a syndicator or a partner or whatever, somebody who can get something like that, that's huge. Because if you can name one huge risk in real estate, it's balloon payments, right? Getting caught with your pants down. You thought it'd be at 4%, it's at 8%, or your value's not there, whatever it might be. That's really the one, outside of like catastrophes, I mean, that's probably like the one risk. And if you can mitigate that with a fully amortized loan. How did you get that? Is that something they offered, or did you ask for it, or?
Just ran into it on accident. They want personal guarantees, but I'm like, all right, so it's fixed rate for 20 years, and then it'll be paid off. So we're almost halfway there now.
Yeah, that's incredible. Fixed rate, 20 years, fully amortized. Wow. Yeah, if I were you, I'd be protecting that bank's, if like, Fort Knox or something. But that's awesome. That's really cool. So have you used local banks for most of the deals you've done?
That's all we got. So I have 200 spots, and then we're planning on buying more, but we push a pause button. I was going through a divorce, still am. So that's finalizing, and should be buying more this year. I want to buy more this year. So.
Gotcha. Yeah, local. Have you found any tips to working with small banks? Because a lot of people, they just, I don't know what it is about that process, but they always hit a roadblock. And it seems like a lot of these local banks care more about, just like an investor would, they care more about meeting you, knowing who you are as a person than a large, debt brokerage would, where they just kind of want to know the deal.
Yeah, I've just met him in person. The one we have the loans through, we can go out to lunch with them. It's a small town. The other one I have in mind is John Matternack. He makes his way around the mobile home park world and meets people, and he's cool. He hangs out with Frank Rolfe and their investor club and shows his face all over. I think he's at trade shows and whatnot. So you just hang out in the mobile home park world and you'll find people that like giving you loans. And
yeah,
I'm pretty sure most people on here know who Frank Rolfe are, so he or always are who Frank Rolfe is. And he advertises MJ Vukovic, the national brokerage. And so there's so many resources out there that I've never used, but I do want to get 10-year loans, at least before we have to refinance. That's a safety protection right there, I think, just having that 10-year time period instead of 5.
Yeah, and it's worth, in my opinion, if you can get it, it's worth the extra interest or the more down. It's just, it takes, 10 years, you can survive an entire 2-term president. So there's a pretty good chance at some point in that, not to bring politics in it, but that's how the world works. Like, last year things were one way, this year they're different. I think they're better now, but it's still, if you buy at the wrong time and you're coming out at the end of 5 years, at the end of a bad period, that's kind of out of your control. But do you find that the value add is a safer deal because of that? Because I've always found that when you buy a value add deal, yes, there's a lot of stuff that can go wrong to get it maximized, but you have so much potential upside that if you can execute on half of what you're thinking you can do, you kind of have a safety net to where if something does go wrong, yeah, maybe you can't refinance or sell it where you thought you are, but at least your LTV is effectively way less than when you purchased it. Has that been your kind of experience too?
We run the risk model, best case, worst case, somewhere in the middle. Always expect somewhere in the middle. So we have like our bottom line KPIs that we know if we hit this is our worst case, so stay away from those and just monitor your metrics. And mobile home parks aren't ridiculously difficult. They're pretty simple, not a lot of systems, as long as you know the major pitfalls getting into it and you're not going to blow yourself up on something stupid with some basic education, they're pretty easy. It's just infrastructure and renting lots, right?
Yeah.
That's what I love about it too. It's like an advanced parking lot.
Yeah, it really is. So many people I run into think they operate like RV parks, and they just do not. There's some of those tenants, I'm not even 30 years old. I don't have tenants I've had 30 years, but they've been at parks for 30 something years, and they were there before the current owner ever owned it. It's crazy. You don't see that really in any other type of real estate. So that, like you said, they are simple, but I think what probably happened in the last couple of years is people thought they were too simple, and didn't understand that there are still some stuff you have to do. You have to be careful of a market. Like if you buy a park in a bad market, I mean, it becomes very hard to operate because you can't fill it up. You can't keep it rented. So what are some of the tips that you would give people in terms of like, hey, you're looking at a park in a market you don't know. What are some of the things you look for to make sure that the market itself seems viable?
Just get a solid metro, man. It's that simple. You can't change the economy, but you can change the park. So if you're not in a solid metro, don't do the deal. That's what I think. My first deal, we bought 2 parks in Sturgis, Michigan. It's not the best metro. It's just good enough. And we bought it at a 15 cap with one of them had private utilities as well and septic. Stuff we didn't want to deal with, but we got it at a 15 cap, so there's so much safety and wiggle room there. We went for it, but the metro area is like 70,000 and the single family home prices have come up now. I think they're like 170 or something like that. So that's helpful, but one of the employers shut down, so we got hurt there. And it's not as easy, and people are bitching about a $15 raise, when you hit market rate, and people are getting squeezed at that, and you feel bad about it, but guess what? We're getting squeezed too. We got bills like they do, so it's just that weaker metro area that you don't want to deal with. And go on bestplaces.net. First thing I do is eliminate the high crime areas. I don't want to deal with them. You can do it if you want to, but I don't want to deal with that. And then we look at the vacancies, and the population, just Frank and Dave standards of where they enter at, the at or below national averages, and then the higher single family prices are better. So we have another one in a stronger metro and homes just fly off the shelf there. We've had to it's kind of cool what we've learned being in a little bit weaker metro area, because it's polishing up our sales a lot lately, trying different methods, and you hear most people when something doesn't work or it stops working, they just double down and do what doesn't work. And we tried that for a little bit. It didn't work. So then we shifted, tried different methods, and now it's starting to work. It's pretty cool. So it's fun watching trying different things and seeing what works, what doesn't work. And just having a business and being an entrepreneur and being able to experiment like that, it's pretty cool.
Yeah, and that's where the planning, a plan's perfect. Hey, we'd love to buy this park. We'll sell homes 21st or whatever. But then you're in a market where, hey, they're not selling quickly. So how do we get this? I faced that headache too, because I have bought parks in smaller metros. And to me, it's almost not even like the metro size. It's like, what does a single family house cost? Because if people can buy a single family house in a market for $80,000, they're damn sure not buying a mobile home for $70,000 and paying your lot rent. But it's definitely, I've learned pretty much, I think, every creative way to have to get a home sold, because like you said, you still got to get it done. You got to get it figured out, and you can do it. So what are some of the tactics you found that help in those kind of scenarios? Because a lot of these parks that you're talking about in these like super nice metros, they're getting bought up. And I think there's more people kind of, getting a little bit looser with their buying terms and going into these smaller metros. What are some things you've found that have helped you sell homes and get parks filled up in those kind of areas? Facebook, yeah. Yeah, it's
Facebook and Google, man. I'm still not a huge fan of Facebook, but I have not used Facebook until more recently, when it clicked into me what Facebook is, exactly what Facebook is. And it's like the most marketing tool now with Google, right? So to me, Facebook is the global phone book of the entire world. You can find anybody on there. My dead grandfather's on there. And then the biggest billboard in the world's Google. So anybody that searches anything ever is going to search Google. So if you're in Google, you're getting searched. It's as simple as that, right? So put yourself at the top of Google if you can. Anybody can do it if you pay enough. But then the geo-targeting and finding the audience that we want. We've been breaking down 80-20 methods too, and like a power curve for the 80% top tenants that we want to bring our vision to fruition of bringing the mobile home parks that we buy to be the best properties they can possibly be. That's our end goal always, is to make them as nice as possible and just provide as much value as we can.
All right, so you mentioned the 80-20 rules. For those who are not familiar, can you walk us through what that's basically the idea that 20% of your headache is going to come, in this case, 20% of your headache comes from, or 80% of your headache comes from 20% of your tenants, more or less.
It's on everything, everywhere, all over the place, kind of like the Fibonacci sequence. And I really started to pay attention to it more with our marketing. I followed a lot of Brandon Turner stuff. So he said, read 80/20 Sales and Marketing by Perry Marshall. That's a great book. And once you get the concept, it just applies everywhere.
Yeah.
80/20 is cool because you can zoom in, you can zoom out, and it works on all levels. At the beginning of the book, he talks about 80 or 20% of our highways carry 80% of the traffic. And if you zoom in, 20% of those highways carry 80% of that traffic, and it zooms in and out on everywhere. So 20% of our residents are the best residents. They can spend 80% of the money. 80% of the money, or the residents there, are also in charge of only spending 20% of the money. Those are the ones we're kind of trying to migrate away from, right? So then you're not worried about an inflation adjustment once you're at market rate with a $15 raise. That's also the people who typically have more pride in their home, or pride in ownership. You don't have to complain about their skirting having holes on it all the time and mowing their lawn. And so it's kind of a community push to just maybe get people that do neighbor shaming too, right? So everybody lifts each other up.
Yeah, I've always, it's very odd. Like, I don't know if you do this as well. When I buy a park, I usually go, with the exception of one park, I've gone to every single one of them door to door and met the tenants. And it always seems like the people who are really excited there's a new owner, like regardless of what the new price is, they stick around. They're all about it. Their homes are always the nicest. And I can almost at this point out this house is going to be a problem. Before I even show up at the door, several non-running cars, the skirting is looks like a piano keyboard. I mean, it's just a complete mess.
Yeah.
Those are the people who just end up moving out. It's totally counterintuitive because they're clearly not spending any money on their house, but it turns out they just don't care. They're happy with the status quo of the current owner who just keeps it cheap and doesn't do anything. And then it's once you kind of start getting in there and fixing things up, they just move out, sell their houses. It's odd. They kind of just filter themselves. Maybe they're getting pressure from the neighbors that I don't know about it. But in terms of our pressure on those people, it's almost nothing. They just tend to leave as soon as ownership changes. Have you noticed anything similar to that?
Yeah, you got me thinking. There's one in particular, kind of at the corner of a street, and this dude's roof has been rusted. All we want to do is, we even tried to pay to have it done. We're going to do it ourselves if we haven't already. But for years, it's just this eyesore, but he pays on time every single month, no matter what. You can't ever get a hold of him. You can't ever fix anything, but he always pays no matter what. We even went to evict him. He didn't even know, and then we could have kicked him out, and he's still paying on time every month. So we talked us into this stupid second chance, but it's a good tenant that just doesn't care about anything. And it's God, you're just going to have to put paint on there if you want it painted, or evict this guy, but he pays on time every month. So I don't know. It takes all types, you got your great tenants, and that goes back to our 80/20, where, you got to be careful what you do as far as fair housing, but targeting people that you want in there, I think is a good way with your marketing. We're trying to target people downsizing, selling homes, that are coming in with a chunk of change and want something cheaper and less to take care of, retired people are great. Those are some of our best.
Yeah, they care. They seem to be from a generation that takes pride in everything. I have a park that's not officially seniors, but it's pretty much 55 plus. I mean, I'd probably have 4 or 5 people who aren't. And man, there's a lady with multiple koi ponds in the front lawn and super well manicured. There's even empty patches that's the park's grass. I don't even know who cuts it, but somebody cuts it. They just like it seen, it trimmed and all. It's crazy, but that's the exception. Most of the parks I bought, I'm trying to get it there. But
where's that one at? What metro area?
It's in Wetumpka, Alabama. So it's outside of Montgomery. So it's not the greatest in terms of size. Montgomery's not an area I'd really want to invest in at all, but it seems like there's good enough jobs there that there's people living in these fringe towns that commute in. And oddly enough, Wetumpka was the home of HGTV's Hometown Makeover, which,
no way.
Yeah, I was telling my mom about it, and I was just like, oh yeah, it's in Wetumpka, Alabama. She's like, oh, Wetumpka, that's the HGTV Hometown Makeover. I was like, what is that? But it's pretty cool. They came through and they took the entire, I mean, you know how all these southern old towns are. They're just kind of dead, and they completely revitalized it, repainted everything, redid the street. It looks really cool.
Great.
So it's a place where people care, and I like that. But I was always really nervous about it because, like you said, with the population, it had been going up and up and up and up, and right as COVID happened, you could see it just spike down. It really because I didn't want to kind of stray from my typical criteria, but I loved this deal, and I just felt like the market was fine. I couldn't figure out why that happened, and long story short, it basically had to do with how much of the population was in the medical field. When COVID happened, there was a lot of shifting. There was a lot of hospitals who fired people. They moved to better hospitals, so there was just a ton of movement. But, the census data is like a few years behind. And so I really had to get down there and but I saw like Chick-fil-A opening up and Publix opening new stores. And I was like, I kind of had to make an anecdotal call. And I was like, I think it's worth it. And so far it's been well. It's been one of my smoothest ones. That brings up another good point. They're not always smooth. What are some of the what stands out as the number one shock or just crazy eventful story you've had? Because every mobile home park owner has a crazy one. And they never seem to not top the others.
I got a few of them, but the overall most crazy one we had was a double homicide, high-speed chase, death by cop.
Oh my god. Okay, I gotta hear this. So that was at your park?
In and out of my park. Let me see, it was a few years ago. Jealous ex-boyfriend from several months prior shows up. The girlfriend apparently broke up with this guy and then went back with her ex-boyfriend. I don't know if I got all the details right. Anyways, she's staying with this guy in my park who was her ex-boyfriend, who she had gotten back together with. And then the jealous ex-boyfriend from a few months prior sees her in town and shoots her and runs her over. And then somebody got out of the hospital and she died. He goes into my park at 9:30 at night, goes into this other dude's house and shoots him in bed and kills him. Yeah.
Wow. And that's not your tenant. There's nothing you could have done to see that this guy had yeah.
It was just coincidence. It's not because it's a mobile home park.
Yeah.
But yeah, it could have happened anywhere. The cops are all there the next morning. They're investigating since 5 in the morning. My manager's freaked out, obviously. And this dumbass drives through town, gets picked up on all the videos, and pulls into our mobile home park with all these, 6, 7 cop cars sitting there. And they're like, there he is. So off goes the high-speed chase. And 10 miles later, they did the pit maneuver, ran him off into some field. And I saw the police footage. The driver that had the video camera was a patrol car. The one that did the pit was a patrol car. So they didn't have police footage on the first one. But as he comes through the field, you can see the deputy standing behind the engine block just emptying his clip over the hood. You can hear it too. The guy got smoked. But I was crazy. There's a happy ending in it, right?
Yeah, man, that is crazy. It always seems to be that a lot of the issues, and I haven't had a ton, but they've been from people who aren't at my park, which is the most annoying thing because it's we're doing what we can. The one I had was basically somebody in the town, completely unrelated to our park, and there's no connection to any tenants at our park. He stabbed somebody in town, and he just starts taking off on foot. Well, he ran by the park and noticed that one of the tenants' skirting had an empty space, so he crawled underneath it and hid it. And so the police are swarming the area, and then they deduce that, okay, he's got to be in this park somewhere. So I'm there that day just helping a guy build a deck and totally find nothing crazy. And then the next thing you know, it's just a SWAT team, just car after car after car pouring into the park. And I'm like, whoa, what's going on? And they pull this guy out like a cat from underneath the skirting, and they threw him in jail. But and so that day, I went around to all my tenants. I was like, I better not see any skirting that's not complete. I always did it to keep make sure there's no wildlife that gets under there and cats get under there and pee and make it smell bad. But I was like, okay, I never thought about criminals hiding underneath your house. So you guys better fix your stuff. But again, it's life happens, there's nothing you can do to prevent some of this stuff, and sometimes it just happens. But as long as I feel like
in lower income housing for some reason, which I never figured out why.
Yeah, it was just kind of an attraction to those seedy characters. They think they can get away with it. One thing I've found is that whenever we buy a park, we always try to change the name. And if it's a park where it's a really bad reputation and we turn it around, and somebody calls us and they refer to that original name, we're not accepting their application. We're not, because if they haven't looked at the park recently and they're fine with the way it used to be, we don't want them coming in to our new standards, right? So it's been something I've tried to train our property managers on, like if they call about Shady Acres or whatever it is, like that's not, tell them thank you and no thank you, you know? Yeah, exactly. 8 Mile, exactly.
I hear that's actually a nice park. I gotta go drive it. There's a park in Detroit I've been trying to buy, so I want to go drive 8 Mile, see what it's like.
Yeah, I mean it's got some history. You got to get a big plaque of Slim Shady out there. So are most of your properties in Michigan?
All three, yeah. We have 200 lots, but I'm hoping to buy in the Sun Belt. I want to buy stuff in Texas, man. I'm really excited about Texas.
Yeah, Texas is an interesting one because I feel like because this sounds simple, but just because it's flat, I mean there are a ton of big parks, and there's a ton of parks with expansion potential. Just geography. I mean, if you drive through northern Alabama or Tennessee, where I've got some stuff, like it's so hilly, you'd have to find a really special area to put a park. And most people are building apartments there. But in Texas, just flat land, you see 500 plus lot parks all over the place, which is probably out of my price range just because there's institutions doing that. But it does seem like a really solid market.
Texas is on fire. They added 660,000 new jobs last year. The triangle between Dallas, San Antonio, Austin, and Houston has over 50 Fortune 500 companies, more Fortune 1000 companies than any other state. It's the 9th largest economy among nations of the world by GDP, and that ranks over like Russia, Australia, Canada, I think. It's unprecedented growth going in there too, and I'm really excited about what's going on in Texas with real estate, and the Southeast as well. I live in Jacksonville and Dallas, and so in my mind, you could paint a picture where we're at from Michigan, go down all the way to Texas, and then from there kind of make a Y shape to the Southeast. The only thing that bothers me in the Southeast is coastal stuff with hurricanes.
Yeah. Coastal, it can definitely be a challenge. What really worries me about that is insurance. Like I worry about tornadoes, but those are at least isolated enough. There's pretty affordable options to mitigate it. Hurricanes are kind of a different story. When they wipe out an area, they wipe out a region, not just a neighborhood. And so it's really tough to hedge against. But there's people who, to make it work, there's people who own everything they own is in the Gulf. They've either they got. Yeah, I do. Yeah, I've talked to him about it. He's actually got a really good point that some of those homes have been there for 50 plus years, and they've survived it. So there's
look at like a timeline. People say that because it's our perspective. If you look at a timeline of human history, if you stretch your arms out in humanity, life on Earth, if you took a fingernail file and did one stroke on your fingertip, that would erase all of humanity. Like I said, if you stretch your arms out, and that represents the beginning of the Earth, or time, right, the universe, and humanity is represented by the tip of your fingernail, one file stroke would erase our human timeline. So to say 50 years it's nothing. That's just our perspective, but he does say, well, it's just liability. I just got liability insurances, so as long as it doesn't destroy your infrastructure, you can replace the homes. I don't know. That's a risk he's willing to take, obviously, but it kind of freaks me out. Like you said, tornadoes. Yeah. If you look at the damage a tornado causes versus the damage a hurricane causes, and this was my thinking came from Frank. He says, nobody's going to care about a mobile home park in a hurricane. If a tornado wipes one out now, you can probably get all new homes put in by the government, right?
Yeah.
You're just going to be an afterthought in a hurricane.
Yeah, it's funny you say that because that's exactly a case I saw when I was brokering. There was a guy in Louisiana. His was hit by a tornado and wiped out every house. And I was asking him, like, man, what was that like? And he was saying, it was actually kind of crazy. It was 6 months of like really high stress for him. Yeah, but at the end of 6 months, his tenants had brand new houses, every last one of them.
That's what I heard.
Some of them it was insurance, some of them it wasn't. And so, obviously that's not something you want to bank on. But same region, it gets hit by a tornado or a hurricane, everything is wiped out. Mm-hmm. It's not in their budget their budget is basically housing illegals in high-rise apartments in New York, not necessarily taking care of our people. But that aside, like they don't take a whole region. I actually had an uncle who worked for FEMA right after Hurricane Katrina. This is completely unrelated, but it's interesting. FEMA was supplying mobile homes like just to that region after that happened. He ended up finding that within 2 weeks, the first 100 that they shipped there, they came from manufacturers all over. They're the kind of cheaper homes. He found that only 4 of them were left in Louisiana at the end of that 2-week period. The rest of them got sold or scammed or something. They got taken out of there because it was just a complete, corruption. They basically were trying to get these homes to people, but it was so much chaos they couldn't do it. The people would get a home and they'd just turn around and sell it, and they'd be moved out anyways.
Sounds like something
not
to deal with. Somebody got a park that was wiped out by a hurricane in Destin. And it was one of those deals that's too good to be true because it's too good to be true. Yeah, and I started picking their brain. They said something about a hurricane. They were rebuilding the whole park and filling all these lots. And they wanted me to buy the park, and they were going to pay me lot rents, even though there was no homes there, while they filled it all with brand new double wides. This isn't making any sense. And then I said, what about this hurricane? Let's go back to that. And they didn't want to talk about it at all. And I finally pulled it apart. It was 140 or 144 space park. I think it's 144. And they had like over 100 spaces to fill. And I'm like, well, wait a minute. What was this place like before the hurricane? And they're like, oh, it was full. Good luck with that one, buddy. I'm not touching that thing.
Yeah. I mean, to me, what it kind of comes down to is like real estate is not that risky. And as a result, it doesn't have like infinite returns. Like you could start a business that could easily go to zero, but you get rewarded for that risk. It could do a lot better. I don't see the point in taking a risk on anything where it could go to zero and get, even like a 15, 20% IRR. It's just not worth it because if there's a realistic chance, even if it's 1 in 200. I saw that come up on a deal where I was looking at North Carolina where I was in a flood zone, and I didn't catch that it was in a flood zone until I was like really excited about it, which is now every time I get excited about a deal, I immediately get depressed. I'm like, there's something I missed. So I dug into it, and sure enough, the whole thing's in a flood zone. And it's like, man, probably not a problem, but the one time it is going to be the day after I close, and they're all going to be gone, and I'm going to be left holding the bag. So it's just not worth it. But you know, it's one of those things. You have to be careful and dot your I's and cross your T's. Make sure you've thought of everything when you're looking at stuff.
Diligence. I didn't even know what due diligence was when I bought my first piece of real estate. I didn't know what it meant.
Yeah. Unfortunately, most of us learn it the hard way. I wish I could say I was good at it too, but to me, as I came into it from the broker space, and so I thought I knew really, really good deals and how to do them. I never knew anything about the day after it closed. And so the first one I bought it, when I closed, I was like, what do I do now? I didn't check septic tanks. I didn't check that the park code homes were full. Like I didn't do anything. And I kind of learned the hard way. Like, okay, you got to figure this stuff out. But then you don't forget. Yeah, then you don't forget.
Flip a home, my first home flipped plenty of mobile homes. But so my first lesson learned cost me about $30,000. The second one's going way better.
Yeah, it's how it goes. And that's, again, coming back to our conversation about like why the operator matters. I see a lot of people like raising money for their first ever deal, and it's got to be hard because even if you're super highly educated, got all the experience in the world, if you haven't done that before, you are a risk to the deal. And going back to what we talked about, real estate is not a very high risk thing. So somebody do it. I mean, my first couple deals I had to do completely with my own money because no one would have invested. I've never done it before.
That track record going. But I've heard a couple things that stick. One of them is it's just as easy to lose money in real estate as it is to make money in real estate. That's true. Yeah, and get good coaching too. That helps a lot.
Yeah, it's worth every penny. Somebody who's done it before, and there's plenty of them out there. It's not that expensive to have them walk you through the process because they get to a point where they're like, hey, they don't want to keep doing it. They have enough real estate. They just want to make the money coaching. And then it's rewarding for them. Like I found that the mobile home park industry of all the asset classes I've heard of is the most collaborative of all of them that I've seen. Because the biggest thing going against mobile home park owners is the stigma. Like if you've got a nice park in an area where every other park is dog shit, it's not going to do you any favors, right? But if every other park, even if it's not you who bought them, somebody else buys them and improves them all, you go to get an appraisal, they look at those higher lot rents, they look at the higher thing, the city starts being more favorable to it. So I think that's kind of one of the things that it's really a team effort. Like every other park owner, obviously I'm bummed when I don't get a deal, and I know they did. But I'm at least glad that it's sold and it's going to go up because I know the worst thing in the world is when I have a lot rent that's higher than the market and the appraiser's like, yeah, well, you're higher than the market. It's like, that's not how it works. Yeah. It's just not how it works, but it's how they view it. Well, Chad, I appreciate it. Is there anything else you'd like to share before we kind of wrap it up? Anything you're working on?
Right now I'm actually working foreclosures in single family, getting cycles, which is super helpful, I think, for me with mobile home parks because of the negotiation cycles that I'm going through are so many more than you do with mom and pop. And we're also taking a deep dive into Chris Voss, Never Split the Difference.
Right. Yeah. Super. I love his book.
Awesome
It's
book.
really good.
Awesome book. And we've got some fantastic coaches that are kind of one off from Chris Voss. I'm really excited about that as well. And there's a cool thing on Joe Rogan. Chase Hughes was just on there. I'm excited to watch that. That's all about Chris Voss. I think that'd be a nice thing for anybody hearing this to watch. They'd probably like it.
Yeah. Cool. Well, if people want to get a hold of you, reach out and collaborate or learn more for you, what's the best way to reach you?
I'd say email me, Chad at brightharborhomes.com. That's going to stick. Or you can give me mhpinvestors.com. I'll give out a...
Chad at mhpinvestors.com.
No, sorry. Buyers. That one would be better. Chad at MHP Buyers. Chad at Bright Harbor Homes. And then I have a Google voice number I'm happy to give out at 702-706-6904.
Perfect.
Yeah, so thanks.
Awesome. Yeah. Well, I appreciate it, Chad. It was great talking to you. Good catching up. Yeah. Have a good one.
All right, you
This
too.
was great.
Thanks for having me on, man. Anytime.
Of course.
All right.